Jerome Powell. How are the markets going to react? Let's just say they're going to be green. We're going to cover that today, why that's important for you as an investor. As we get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So we love to have green on a Friday, and that's just not green grass to mow, but green in the stock markets and green in your portfolios. So what's the big news? Fed Chairman Powell indicates conditions may warrant a rate cut. That's like the softest way of saying rate cuts are coming, and I'm finally on board with it. So very, very soft pedaling forward. How did the markets react? Wow, up big. S&P up 1.6%, NASDAQ up 2%, Bitcoin is up 4%. Good news and good news, and we love to see this. Markets jump around on this. Is it going to go up like this every day? Of course not. So, but we'll take it today on this Friday. What holds it back? Tariffs. I mean, tariffs. The concern of inflation. So, an article I saw in a couple companies like Target, Walmart, and Home Depot. Like, where do you spend a lot of money at? Target, Home Depot, and Walmart. They're saying they're raising some prices, but not nearly as bad as they thought. It's kind of, there's ways they've kind of shifted costs back. It's kind of a slow game. So, in fact, I like this. Tariff costs are rising for retailers, and they've had to get creative to avoid widespread price hikes. Huh. So you're saying they were charging us so much money, or they had so much inefficiency that now they're forced to save money? That's what this article says. So good. That's good for all of us. That's good for us as a consumer. That's good for the government to have dollars so that we don't have to pay all the taxes. And that's good for us as owners of these companies, for our companies to run more efficiently. The only other thing that I want to say related to inflation is, what is the biggest driver of inflation? And I've always liked this chart. This comes from JP Morgan Chase, and it shows what drives inflation. And let's forget that big surge in 2022. That was very sad. A lot of things drove it. But what drives inflation mostly? Shelter. Shelter is the biggest one. So your house costs, rental costs, and then the second biggest is dining, recreation, and other services. Guess what? Do tariffs affect either one of those two? Very, very little. I mean, tariffs affect things like goods and autos and things like that. But as far as the cost of housing, I guess, you could say the materials to build a house are affected. Those are the things we need to drop to lower the inflation rate. So, I mean, those are the things we keep on. You can see that auto insurance, which is that red line, and affects me with all my teenagers. Hey, that one's finally going down. It's still increasing, but at a decreasing rate. So we'll take it. So Corey's going to dive into a little bit more analysis of what Powell said and kind of share a continuation of yesterday's presentation.
Yeah, I'm happy to say that I was wrong. I thought that the lack of clarity around future actions might be perceived negatively by the market, but it seems that opening the door at all was all the market wanted. It just wanted to know that that door was going to be open for rate cuts down the line. A few of the things Powell mentioned was that they are still seeing upward inflation pressure, and they are seeing downward employment pressure. So it's they kind of contrast each other a bit, according to their dual mandate of steady prices and full employment. So he just mentions that the pressures, the weightings of them, indicate that rate cuts they are adjusting their stance and adopting rate cuts. So yeah, I can share out just one thing. I mentioned that we had drifted 1.5% below that all-time high on the S&P 500, in recent days, and now, really in one clean swoop here, we're right back to just below all-time highs. I wouldn't be shocked if we got a new all-time high today, but that would be a very large move. So it'd take a 2% move to get there. Mike, I wanted to talk about something, so these daily returns, right? Monthly returns, annual returns can be very exciting. But I've seen something in talking to clients or potential clients, people in the field, that I think is a little misguided or misunderstood about actually building wealth. You'd be surprised, Mike. Or Mike, let me ask you this: have you met anyone who said something like, "I've got 6 figures just sitting in a bank account somewhere"? Have you ever met anyone in that?
Yeah. I've met people that are like, yeah, I've got it in my high yield savings account as my emergency fund, and I'm like, hey, if you're talking a small amount, hey, no big deal. But the bigger the amount, the more you're kind of loaning the bank to give more money. I mean, I know you get 2% or 1.5% or whatever it is, but you can go get. I'm like, you can get 4.2% in the U.S. Treasury fund, or I mean, there's like very, very safe options out there. So I do run it, and I've occasionally run into the person that's like, I've got cash in my safe, and I'm like, okay, good. Probably shouldn't tell me that, but it's like,
when you're having these conversations, do people mention why they are doing that as opposed to acquiring appreciating assets? Like,
usually they have a balance, so it's not like I don't think I've run anyone that has all their money that way. So it's I have investments, stock markets go up and down, I get that part, but they're like, it's some of it is if everything crashed, I still got this, or if the whole world comes to an end, I got what's in my safe that's backed up by nothing anyways. So but then again, if I got what's in my safe and it's a coin or whatever, it makes them feel secure.
Sure. No, I do understand the feelings behind it. I just wanted to hit on this concept of actually building wealth and what that really means, because it does seem, I find that there's some confusion out there around that. So if someone wants to become wealthier over time, the key, right? If you want to say the key to building wealth, they are going to have to acquire assets. They're going to have to acquire appreciating assets. So things like a CD or a money market account, or really most fixed income assets, these are not going to be the things that appreciate in value long term. Now, of course, yes, they'll generate you some interest. You can reinvest the interest. You could still compound value in that structure, but the actual asset itself is not really designed to appreciate. In many cases, you get a bond, it'll eventually just mature, just sort of go away, and you got to figure something else out, right?
Yeah.
I just want to hammer this idea that if we want to build wealth, you have to constantly be acquiring appreciating assets. And if you're sitting on large sums of money that are not in appreciating assets, and yes, some of those things, they do maybe make you feel good, and that's fair, but if the ultimate goal is to build wealth and to reach financial freedom, your real goal should be acquiring as many appreciating assets as possible. Now, and here's what I like about like this concept versus thinking of it just as investment returns. If I'm just thinking of my investments as like what returns they're providing me in a given quarter or a given year, then I could become discouraged if I'm not getting great returns in a given quarter or a given year. And if I get discouraged, I could get sidetracked. But if I switch my thinking to building wealth and acquiring assets, well, then when those assets are becoming more valuable, I feel good. My ego is feeling good. But then when those assets are becoming less valuable and they're on sale, I feel really good because I get to acquire more of them faster. And so if you think about wealth building a little bit less in what are my daily, monthly, quarterly returns, and more about how many assets do I own, and I get to own more of them, then you kind of are always winning because you can always find ways to buy more. So I just wanted to talk, and as you do that, as you acquire lots and lots of assets, does an Elon Musk worry about needing money under his pillow? No, because he's acquired enough assets that he's going to be okay. The volatility doesn't hurt him anymore. And I understand people who are in the stability stage of building wealth, and you truly do need an emergency fund. I get that. We've all been there, or most. Hey, those that were never there, good job for them. They got blessed. But most people have been there. Then you get a strategy that you adopt, right? You find this could be real estate, stocks. I would argue that CDs over and over and over is not a great strategy, but we could talk about that later. And then you get into security where, okay, I've really actually built something. Now my wealth is really kind of working for me. Eventually, the goal is to get to financial independence and freedom. And then if you just keep going, you keep acquiring assets, you can eventually get to abundance where you've got enough to where that volatility doesn't hurt you anymore. But if you're always worried about volatility way down here, you can really never get up here. So anyway, asset acquisition, that's really the number one mindset for building wealth. It's not daily returns. And I'm saying this on a day where we're up big. It's fun, but it's not the main goal every single day.
Absolutely. You're right. And one thing that I guess I've always thought of is, how can I increase my earning potential? And that's through like education, skills, taking challenges, things like that. Because it's one thing, the goose lays the golden egg, and if you just keep it in gold, you might not make that much. Or if you put that egg in CDs, you might not make that much. But if you improve the goose to laying more golden eggs, you really ramp it up. So, I would say, wealth it's also that, improvement of the goose.
Absolutely.
All right. Well, let's keep this thing green and roll into next week. Everybody have a great weekend. Bye.